What is going on, guys? Welcome back to the channel. Hope you like that intro. This is like my third or fourth video that I put out starting with a workout, and you guys really seem to like those type of videos. Just got done with the workout, so I'm still trying to calm down, trying to relax a little bit. The idea for this video came about one of you guys' comments. You guys wanted to know the language and kind of like the lingo for the stock market and different words that people use. You didn't even know what he meant. And honestly, there's a lot of words that I still don't know what they mean. If you're new on the channel, then you know I'm a new investor. I'm basically sharing my journey, sharing with you guys as I learn different things. And this was something that I really liked when you guys commented, because not only did it give me the idea for the video, but it also helped me learn a couple of different words that I have no idea what they mean. So hopefully by the end of the video you'll have a better understanding of what it means. I'll link below the website where I got all these meanings from so you guys can see it. I'll also try to do a visual for every word. I'll put the link description below so you guys can know exactly the description. And hopefully if you can listen to it, maybe go back, replay this video again, and as the words they come up, you're like, okay, I remember, that's what that means. Okay, so this is what bull market means, this is what bear market means, this is what dividends mean, this is what buying and this is what selling stocks mean. And that is the purpose of the video. All right, again, I'm still a little pre-workout, like I said, it's still kicked in. Bear with me, we'll get through this. So these words are not gonna come in any specific order. I'm just simply going off by what the website has, and I'm just reading them as they come up. So they're not in any specific order. It would make it better if it was like that, but it's not. So again, I apologize. I'm just gonna go through it. So let's go. So the first word that we have is buy. So buy means to take a position or to buy a share in a company. That means when you buy a stock, or when you buy a share, when you buy a fractional share. All right, next word we have is sell. Sell means getting rid of the shares that you purchased, either because you've achieved your goal or because you want to cut your losses. So basically, whenever you buy stocks and then you're making enough money that you're like, okay, I want to invest some of that money to something else, you can sell a couple of your shares and then buy more stocks or different stocks, or maybe you want to take the money. Then we have bid. Bid is what you're willing to pay for a stock. That's more into options, I believe. Again, correct me below if I'm wrong. Ask is on the other hand is what people selling stocks are looking to get for their shares. I believe, again, that's going back to options. When you have an option for a stock that you haven't asked for whatever money you want for that contract or that stock, and then you're willing to sell it. All right, next up we have bid ask spread. The bid ask spread is the difference between what people have to spend and what people want to get. The spread must be resolved before the transaction can take place. Not sure what that one means. All right, bull market. A bull market is a market condition that means stock prices are expected to rise, which is basically a bull market is what we're on right now. A lot of people are buying stocks because they expect the market to grow. They expect that the stock market is not gonna be like how it is right now forever. It's gonna stay like this for a little bit, but eventually it's gonna pick up and you'll make a lot of money in the long run. A bear market. A bear market is one in which investors expect stock prices to fall. This is where short sellers shine. So this, I could be wrong, again, correct me if I'm wrong. The bear market is when you think, I wanna say you wanna use this for options. I keep going back to options even though I don't know too much about it, but I kind of have an idea of what it is. I guess in the bear market, if you know the stock, if you think the stock is gonna go down, then once you're in the bear market, then since you're gonna go down, you can make a bid that the market is gonna go down, and then if it does go down, then you'll make money. This is what I think mostly it means for options and stuff like that. I'm not sure for dividend stocks, which is what I'm invested in. All right, then we have a limit order. A limit order provides instructions to only execute or under a purchase price or at or above a sales price. Always use limit orders, not market orders. Not sure what they meant there. I'm not too familiar with limit orders. So again, please do your research. A market order. So a market order provides instructions to execute as quickly as possible a transaction at the present or market price. Don't use market orders. Not sure why they wouldn't use market orders, but I know a lot of you guys that watch the channel usually give me some input, so let me know why it wouldn't be a good idea to use market orders. Also, I want to point something out. I did not read this beforehand, so I'm just reading them with you guys as we go, as I record the video. So I apologize if I stutter, if I don't put the sentences together. All right, so next up we have good till canceled order. A good till canceled order means that your order stands until you cancel it, and it will be executed whenever the stock comes to your price even if it's a 2-3 weeks down the road. What I believe this means is when you put a stock, a price to cancel order, I believe this means that it will sell once you hit that price that you want. A day order. A day order means that your order is only good for the day when it is placed. Again, that's, I believe, when you're day trading or more when you're doing options. I could be wrong. Volatility is simply how fast a stock moves up and down. This word is gonna come up a lot, especially when you hear people talking about Tesla, like volatility. They're super volatile. Tesla is one of those stocks that it could be at 1,000 1 minute, it drops down to 800. Bitcoin, super volatile. This word is especially, you're gonna see it a lot if you're using Robinhood or Public app. I believe they use it a lot. So make sure that you can see the percentage whenever you're buying the stock, you see how volatile it is. Then we have liquidity. Liquidity is how easily you can get into and out of a stock. Trading volume. Trading volume is the number of shares being traded each day, a factor that has huge implications for a stock liquidity. Going long. Going long means you're betting that the company stock will increase in a price so that you can buy low and sell high. Averaging down. I made a video about this, so let's see. This is when an investor buys more of a stock as the price goes down. This results in a decrease of the average price at which the investor purchased the stock. Basically, this is something that I made a video about a couple weeks ago, well, even now. Wells Fargo is going down. When I first bought it, I bought it at $27.64, the average price. But since it's been going down and I keep adding, I'm lowering the average cost because I'm not planning on selling Wells Fargo anytime soon. I'm gonna keep it for the long run. So averaging down cost helps me when the market is down, well, when Wells Fargo is down and I purchase more. Next up, we have capitalization. Market capitalization refers to what the market thinks a company's value is. This word I've never seen, so it's gonna be new to all of us. Well, it's gonna be new to me. Public float. This is the number of shares that can actually trade. Once shares that insiders like the company C, suit, and early investors controls are subtracted. Not sure what that means. I'm gonna have to do a little deep dive into that. Authorized shares. This is the total number of shares that a company can trade. It is always bigger than the public float. IPO. An IPO is an initial price offering which happens when a private company becomes publicly traded company in order to raise money. Secondary offering. Secondary offering is a company stock is doing well that they may do another offering in order to sell more stock and raise more money. Haven't seen that one either. I've seen this one, blue chip stocks. Blue chip stocks, these are the large industry leading companies offering stable dividend payments. Blue chip stocks, I can speak into this one because this is what I invest in dividend stocks. For example, Wells Fargo, Johnson & Johnson, CVS, ExxonMobil. And these are blue chip stocks, companies that have been around for a long time. They're not going anywhere soon, even though they could. And they pay dividend stocks, which is what I'm invested in. Forex. Forex or foreign exchange involves trading different currencies. I don't know too much about Forex trading, but I know it's very popular amongst a lot of YouTubers. Hedge funds, mutual funds. So hedge funds and mutual funds are two different types of investment accounts that you can buy into. They turn around and invest your money in dozens, hundreds, or even thousands of stocks. ETFs. ETFs are exchange traded funds. They're like stocks because you buy and sell shares, but they're also like mutual funds because they track an index. ETFs is another popular one that you see a lot, especially here on YouTube. People talk about it all the time. They're invested into them. ADRs. ADRs are an American depository receipt for foreign companies that trade in the US. Beta, a measurement of relationship between the price of a stock and the movement of the whole market. If stocks XYZ has a beta of 1.5, that means that every 1 point movement in the market, stock XYZ moves 1.5 and vice versa. I haven't seen that one. I think that one's more for options. I could be wrong. Broker, a person who buys or sells an investment for you in exchange for a fee. So basically like Robinhood, Public, E-Trade, Charles Schwab, M1 Finance, all these companies that you see, the apps that you see people talking about, which by the way, you can get your free stock down below with Public or Robinhood. Next up, we have, so day trading is the practice of buying and selling within the same trading day before the close of the market on that day. So day trading is a different way of investing. I'm not too sure how it exactly works because again, I try not to day trade because my nerves wouldn't take it. Dividend investing, my favorite. This is a portion of a company's earnings that it is paid to shareholders, people that own the company stock on a quarterly or annually basis. You guys know I love dividends. It's what I'm invested in. Recently, I've been more and more liking the idea of monthly paying dividends. I'll make another video about that soon. But for now, Let's keep going. Exchange. An exchange is a place in which different investments are traded. The most well known in the United States are the New York Stock Exchange and the NASDAQ. Execution. When an order to buy or sell has been completed, if you put in an order to sell 100 shares, this means that all 100 shares have been sold. All right, we're almost done, guys. We're almost done. Margin. A margin account lets a person borrow, take out a loan from a broker to purchase or an investment. The difference between the amount of the loan and the price of the securities is called the margin. Moving average. A stock's average price per share during a specific period of time. Some time frames are 50 and 100-day moving averages. Portfolio. A collection of investments owned by an investor. Quote, information on a stock's latest trading price. This is sometimes delayed by 20 minutes unless you're using an actual broker trading platform. Rally. A rapid increase in the general price level of the market or of the price of an individual stock. Sector. A group of stocks that are in the same business. An example will be technology sector, including companies like Apple and Microsoft. Stock symbol. A 1 to 3 character alphabetic root symbol that represents a publicly traded company on a stock exchange. And the last one. You made it this far. Thank you so much for watching. The last one is yield. Yield refers to the measure of the return on an investment that is received from the payment of a dividend. All right, guys, so I went through this super fast. Hope you guys like that. Play the video again. Maybe these words will get more and more in sync and it'll make more sense to you as you watch, as you learn, and hopefully it keeps making sense. I know this world of finances is a lot. It could be a little overwhelming in the beginning, especially when you're starting out. As myself, I don't know a lot of what these words mean. I try to learn, I try to learn as much as I can. I try to educate myself in different things. Now when I see these words, I'm gonna go ahead and reread them again. Whatever I don't know, I'll make sure I go in the Robinhood app, see if I can search for them, and if I see them, then I can point them back to, okay, so that's what this means. That's what that does. That was the purpose of the video. I really hope you guys enjoyed, you got some knowledge of it. Again, I'll link the website where I got the definitions of these meanings from, and if you want to go reread them there, then by all means go ahead. That's been all for me. Thank you guys for watching. Hope you like the intro. Hope you guys are liking this type of videos. If you do, give me a thumbs up, give me a comment below. What would you like to see more of? And as always, thank you so much. Have a good one.